Hi, Brian Evans here. I just wanted to take this opportunity to give you an update on what we're doing in the markets and so forth. Obviously, it's on everybody's mind. These are very unprecedented times, and certainly been tracking the market. If you watch my two previous video conference emails, I shared with you some moves that we made to take a lot of the sting out of the drop in the market so that we weren't fully exposed to the drop in the market. And this is generally speaking, everybody's account may be a little bit different from everybody else's. But for most people, we made some moves in your account. Most of the clients of Madrona Financial also have real estate investments, whether it's private non-traded REITs or Delaware statutory trusts. Many of you also have fixed index annuities. Thankfully, those are unaffected by any drops, so we can feel confident about the amount allocated to those. And I know a lot of people have been contacting me saying, maybe I overestimated my risk tolerance and we should review the fixed index annuity portion. And maybe as the markets recover, which most people think they will, of course, that they might maybe want to up their amount to the fixed index annuities. But that being said, we've seen the market drop from nearly 30,000, the Dow anyway, from nearly 30,000 to a low in the 18,000 range. That was kind of what I was looking to happen. As I look at prior crashes back to the dot-com 9/11 recession crash of 2000 through 2002, we were looking at a 35 to 50% drop right in there. It took a longer time to do though, because back then we didn't have computer algorithms messing with the markets, and we didn't have the kind of trading we have, the ease of trading, the low cost trading, and we didn't have the 24/7 news coverage on our smartphones and smart devices. We had flip phones and so forth and newspapers back then. So news traveled a lot slower, as did the panic surrounding that. 2008 was similar in a lot of respects, a very steep decline all at once, concerns about the economy in general. It bottomed out over a shorter period of time from September to March. So it took about 6 months to bottom out. Again, a 35 to 50% drop. The government did enact some adjustments to help out the economy, but they didn't do a very good job of it. So it took a while for it to recover. Fast forward to this one, fastest drop in history. We had about the first 35%. I thought that could happen. That's when I made the initial move that if the markets continue to drop, then we'd probably see a similar 35% at a minimum, and we basically touched that amount. I thought it could go lower, but I'm kind of changing my views on that as we're seeing maybe some progress being made on the coronavirus immunizations and so forth. We're also seeing unprecedented actions by the Fed, by Congress. We think it hasn't happened as of this recording, but it looks like they're going to put something together to pump a lot of money back into the economy, which is good in the short term. Not the long term for you younger folks that have to pay that back, but I apologize for that. But in the short term, so I'm seeing a real shift in what's going to happen. And when it comes to markets, I'm not saying that the markets can't drop again. They may. I don't know what the shape of this drop is. It could be a V, where it drops suddenly and takes about as much time to recover. It could be a check mark, where it drops suddenly and then recovers more gradually. It could be a W, a misshapen W, where it drops, has a recovery, drops again. That's somewhat plausible in any scenario because we don't know what's going to happen. I do know, though, that we took some moves to protect on the downside. That was half of the equation. We got that half right. And then we re-entered the market today. I put that money back into the markets. And so we know that was a win. We can lock that in as a win. We sold high, bought back in low. That's what you're supposed to do in investing. very difficult to do when you're in the middle of the game to see what's going on or what's going to happen because we don't know. But I do know we locked that in. Did we lock it in at the very bottom? Of course not. I think based on what's happening today with the market recovering due to some optimism, we may have been close, or it may drop again. But I think there's a better than 50% likelihood that 3 months from now, the Dow will be above 20,000 as opposed to below 20,000, or at least 6 months from now, and certainly a year from now. Our clients are long-term investors. If you're a short-term investor, probably shouldn't be in the market to begin with. But if you're long-term, we have to look at what is the likelihood of corporate America maintaining, 1/3 off price or going even more. Probably less than it is that we're going to have some recovery. I don't think that all the companies in the United States are worth 35% less than they were a month ago, long term. Because when you buy a company, you're buying its present value of its future expected earnings. If they're going to have one bad year in the next 15, okay, that value has dropped somewhat, but it sure didn't drop by a third or a half or anything like that. So most of my clients that have been calling, they have not been worried that the market won't recover. They're just worried about missing a buying opportunity. So, kudos to them for being true investors. You're supposed to buy low, and it's hard to do that. And so that's what we just did. We did the hard part selling when we didn't know what was going to happen, and going to some protective measures, which we did a couple weeks ago. And now we did the second half of that equation, locking in a positive result from that move. So that's where I'm at right now. We've done that already. Carolyn managed to do that this morning, and so I appreciate her hard work in that. It's not easy to do literally thousands of trades that she did. Thankfully, we have great technology here, and we were able to do it. Everybody gets essentially the same price because it was all done in one master trade. And so glad we were able to do that. Now, as far as the real estate holdings, there's certain real estate holdings that I don't think are under particular pressure. Certainly net lease properties, I think they're looking good because the ones we were in were very recession proof. A lot of the DSTs have a lot of protections. It remains to be seen. I'm going to reaching out to Blackstone to see what they think about their hotel holdings long term. Certainly in the short term, they're not going to do well, but I don't suppose it's going to be an endless kind of thing. I think Americans in general have a pretty short memory when it comes to difficulties like this, and we get through it, we move on, we press on, and the economy comes back. All of the attributes of a strong economy that were in place are still in place, except for this stoppage. And we're going to have unemployment. We're going to have a lot of industries under pressure in the short run, especially those that were over leveraged. So there's still going to be fallout from all of this. I just want to share with you, we did lock in a positive result on the moves that have been made over the last couple of weeks. Again, I don't know what's going to happen in the weeks to come. I do feel like, and I would hope that I suspect that most people would agree, we're going to see resiliency in the equities. One of the things about the stock market is that it recovers way ahead. It's called a leading indicator. It recovers way ahead of when good news actually happens. If the stock market investors believe something good is going to happen in the future, and a year or 2 or 3 years from now, they're going to be rewarded for getting in now as opposed to later, they do it. And that's why markets lead way ahead of the good news. Once the good news comes out, you're too late. That party's over. The markets have already recovered way before that. And so that's why it's difficult. It's difficult to know when to buy back in because I don't know what the news is going to be. And it's not going to be good for a couple weeks out. But that doesn't mean necessarily that the market won't be good. In fact, they could pass a Senate bill later today or tomorrow, and the markets could drop as a result of it. They tend to do that in the short term. But overall, I think our chances are much higher than 50-50 that in the near to mid future, the markets will have recovered, and we'll be glad that we sold high and bought low in any circumstance, no matter what they do. So that's kind of my update right now. I'll keep you posted on other things as I see them. As I learn about real estate holdings, they've been really good for our clients coming up to this point as something not correlated to the market, especially the non-traded REITs and so forth and DSTs. But we'll continue to monitor that and keep you posted on that. And if you have any questions, please contact our office. But for the most part, all I've been hearing from investors is they're glad we made a defensive move when we did. I hope that you're glad that we made the putting the money back when we did also, not knowing what the future holds necessarily, but we know it's lower now than it was when we made that first move. And so we'll continue to communicate with you as I have information to communicate. Again, this is all new world we're in, but hopefully we get through this sooner rather than later. The indications to me are that we will, and for the most part, but we'll have some nicks from this, some dents in our chassis, but we'll get through it, get those knocked out. So that's the update. Again, feel free to reach out with emails or phone messages. Emails probably better. I can respond more easily to those. And let us know any feedback that you have. But hopefully finds you well right now, that you are well. You're not suffering too bad from all this is going on. It's real, but we'll get through this. And thank you for listening.